Hello and welcome to our presentation. My name is Ronnie Odell, and perhaps you were invited here by one of our associates or through email or a marketing letter. Whatever got you here, you're here to learn more about this particular program that could save you money and reduce your expense at your upcoming renewal. We're hoping that we might be able to do that for you. And this series is really designed in a modular fashion. It's meant for you to be able to go through without the interaction or the requirement to have to meet with a salesperson or a marketing person, take time out of your day. You can do this in the comfort of your home, your living room, or your office, on your iPad or computer at any time. You can stop and start, go back. I recommend going through the modules in sequence, and then once you've done that, you can go back in between the modules to select specific information that you might have found useful, and or if you needed a second round just to better understand it, if you needed clarification, or if you were making notes and you wanted to go in and fill some notes to create some questions for us or for the sales individual that directed you to this resource website. So there are multiple modules. Each module has a specific topic and it builds upon each other. So as we move forward, what I want to do is I'm going to go ahead and take the video portion of me out. That's not important, but I did want you to see who you were working with. And then this will allow the presentation to actually enlarge. So we'll go ahead and do that right now. Each presentation is anywhere from 10 to 20 minutes in length, and we will go ahead and begin. The first slide that we're going to review is really, I call it the money slide, because that's really what you were interested in. You wanted to make sure that this would be something viable for your particular operation. Is it meaningful to you, and is it worthwhile going through the remaining modules? So what I'm trying to do is make sure that you understand that this program has a high potential of saving you money and reducing your out-of-pocket expense at renewal. Now, this story is pretty typical for our organization and for the policyholders that come on board with our program. They usually come to us at what I call the 11th hour. Most of the insureds that we work with, they're getting quotes from other markets, meaning other insurance carriers, and the market is not being kind to them. And or they already know the market's not going to be kind to them because they're with what we call a carrier of last resort, which is like a state compensation fund carrier. And they're hopeful that maybe another standard market carrier will come to the table with lower rates. So right here we have a tree installation firm, and I listed out for you their class codes: nurseries, landscaping, trucking, I have it there twice, clerical, and sales. Their payroll is close to $2 million. Employees approximately 42. Their expiring payroll is $220,000, and their XMOD, it's pretty high. It's 1.47, and that was for 2012. And their XMOD for the 2013 renewal that just passed actually went down by 10 points. So the owner was really expecting their rates to go down. So 1.38 is where their XMOD went down. So you would expect, the client expected their rates to go down. However, the broker, after exhausting all the markets, because I know the broker, was not able to come back with any other competitive quotes other than the renewal quote from the incumbent carrier, meaning the carrier who currently has the active policy. And despite the lower XMOD, the renewal quote came in $110,000 greater year over year, and the client was not expecting this. He was really puzzled, baffled, upset, flabbergasted, really, and he was also not expecting to write out a larger renewal check. Last year his renewal check was around $33,000, and now he was expected to write out a check for $50,000, which was not what he had prepared for. Especially given the fact that his XMOD had gone down, he was expecting at least a little bit of a break. The broker that he was working with, who he had been working with for several years actually, told him that there were no other options. Funny story, the client was actually doing a large tree installation at another broker's house, and actually the broker had noticed in their conversation that the business owner of the tree installation company was a little bit annoyed when they were just talking, and he wasn't quite sure what it was about, but he had recognized a change in attitude since they had bought, tens of thousands of dollars in trees. And the gentleman apologized, the tree installation owner apologized and said, "I am so sorry, I have a lot on my mind, my rates just increased." And he told them, gave him the story, and long story short, the tree installation firm's client happened to be a broker, and he said, "Listen, I may have a program for you," referring to the program that I'm introducing to you, "that might be able to save you money and reduce your out-of-pocket expense. Would you be interested?" So with nothing to lose, the tree installation owner said, "Yes, I will email you over the Accord 130 loss runs and all that as soon as I get back to the office," which he did. And in turn, that broker sent the client's file to me to review, which I did, and within 24 hours we had a quote out to the broker, and we presented to the client the next day a non-binding rate quote, which once we presented and the client said yes, he was ecstatic, he was relieved, he couldn't believe it. He said when he reviewed our numbers came in at $239,548 plus taxes. So in comparison to the renewal quote, we had saved him $101,952. And the out-of-pocket requirement at renewal was only $6,568 to bind coverage with our program, which was a huge relief. And that ended up being $43,000 less out of pocket compared to the other standard market program presented by the other broker. So we requested for the approval. Within 1 business day we got the approval, and within 3 business days this client was bound and certificates of insurance were released to all of his clients and to the CSLB, and he was happy. I had a happy broker, a happy client, and this is a common situation, a common experience with policyholders that meet specific types of attributes or underwriting attributes for our program. Not every client or prospective client is going to have a windfall savings like this, but those that do fall into our specific underwriting bucket, so to say, they do reap huge benefits. So if you're here, it's because a broker or we reached out to you for a specific reason. Sometimes in life we get stuck, and we reached out because we noticed through research that you have a high XMOD and that your class codes with your business are high XMOD class codes, meaning you pay a lot of money to an insurance carrier for every $100 in payroll in order to insure your workers. And sometimes you end up paying more than your competitors, and it's due to a variety of reasons. That's because you're high hazard, you're distressed right now. You know, you could have a high X mod, you're canceled, non-renewed. You might be uninsured. You might be stuck with the state comp fund or an assigned risk carrier. You know, you may fall into, one of these categories. Since we haven't spoken, I don't know exactly what your story is. However, the types of accounts and types of clients that we work with, this is typically their story. Bottom line, you probably feel that you're paying a lot for your comp. And if that's you, if you feel like you're in that category, then this particular module, this presentation was designed for you so that you can learn how you can lower your costs and get on a path to even lowering them more in the future. Things that you kind of control. These are the common reasons why your rates go up, and some of them you already know, some of them you may not be aware of. The reason why your rates are high, some of them you kind of control, but you don't. Your rates are high because of the type of work you perform. You could have started a company that's clerical or outside sales, but you're not. If you're a truck driver or doing hazardous work, painting, you're on scaffolding, you're working with machinery, that's much more hazardous, so of course you're going to pay more. Your loss history, maybe your XMOD, and we'll review what an XMOD is in another module, but maybe your XMOD is high. And so due to your claims history, size of claims and frequency of claims, you're paying more for your premiums. Your operations, underwriters look at the quality of your loss control, if you have any at all, and your risk management. They look at how much wages you pay. Are you paying guys, that are doing, high level work, $8.50? Or are you paying them a good wage? They want to know what type of level of worker you're hiring. Use of part-time labor. Do you have 400 guys all working part-time when you should really have 100 guys working 40 hours a week? That's a red flag to an insurance carrier. When they see all this part-time labor, they're assuming you're just not reporting hours, and that you just have them all categorized at part-time because you don't want to pay the premiums on it. So while you think you're getting away by not paying premiums on unreported wages, they are going to hit you with higher premiums. Go figure. I mean, these carriers have been around. These guys have, hundreds of millions of dollars for a reason. They know red flag when they see it. Wage distribution between class codes, another, trick that companies think that they're getting away with, but they end up paying for it anyways, either through higher rates or just not having any carrier that's any good carrier that's gonna want to insure them. I mean, you have $1 million in payroll, and 900,000 of it's clerical, and 100,000 of it's in a painting code. Everybody knows that you're putting painting wages in your clerical because it's cheaper. If those are reasons why carriers either decline or charge higher rates to those types of companies. I'm not saying you specifically. I'm just saying those are potential reasons why rates are higher. Things you don't control. Carriers have been hit with rising claims due to the recession, forcing them to raise their rates since 2008. Claims that were filed before 2008, when premiums were low, are increasing. The cost of those are increasing. They're aging, meaning these claims should have been closed out a long time ago, but they're not because of the economy, and that's causing carriers to have to raise their rates in order to fund the cost of those claims. And they're raising rates, 5, 10, 15% a year. So that's impacting you negatively. And then we have those unethical or quick buck employee mentality causing rates to rise. Fraud, those fraud claims that you might have. So we see those on the rise. And then if you have a high X mod, that limits the number of carriers willing to offer coverage to you. So you may be stuck with a carrier of last resort. The problems that this may cause, I hear this every day. I'll work with brokers, but I also work with the end user or the policyholder, reviewing our program with them, and I get to hear all their troubles, all the problems that high workers' comp rates has on them personally. It impacts them. You know, they feel like they can be successful, but they're heading for failure. They say it causes stress and irritability, loss of sleep, self-doubt, thinner profit margins, trouble paying bills, difficult to compete, difficult to grow, fear of going out of business. Family, when I'm talking about family, they're like, got to pull the kids out of private school, can't pay the bills at home, can't get into the house that we had planned, vacation, can't get the wife the car she wanted, whatever it is. I hear all of the problems that it causes at home, personally and professionally. A little bit about me before we end this module, and you'll go on to the next module. But there's my education. You can see that I really enjoy school. I'm a licensed property and casualty and life and health agent, bachelor's, master's, MBA from Pepperdine. Prior work history, having worked with ADP and Paychecks. I understand all of that, timekeeping, payroll processing, HR, how that all integrates, workers' comp, business insurances, risk and loss control, and underwriting. And then that would be my background, as you can see from the companies that I've worked with. My motivation for preparing this is I launched this program here in California. We have it in 17 states, and that's growing. And here just in California over the last 24 months, we've brought on 500 new clients, and that's amazing, which represents over 60 million in work comp premiums. Savings ranges from 10 to 30%. 85% of the new clients introduced to the program have been by non-incumbent agents, and that was troubling to me when I reviewed this, because 90% of policies are renewed by incumbent agents. And what does that mean? Typically, the agent that a policyholder is working with renews it year after year after year. And what I found was that those agents are not letting their clients know about this particular program. They're not. Only 15% of the 500 came from an agent that was working with the client and decided, hey, you are a distressed client, this is going to save you 10 to 30%. I don't understand this program, but let's at least explore it. So what I believed was that this number is only a drop in the bucket, and more business owners need to be aware of the benefits and options available to them. And so this presentation allows me to take the burden off of retail agents and our sales associates, so that I can better explain the program, so that they don't have to, and so that you can personally review this at your own leisure and get a better understanding and grip as to what we can do for you, so that these retail brokers or your agent can help you make a decision, or at least educate you as to what is available to you in the event you decide you want to move forward with this or not. At least you'll know about it, rather than moving forward paying, unbeknownst to you, paying higher work comp premiums than you otherwise could if you were to move to our program, if you qualify. So moving forward, and we're going to end here, we're at almost 20 minutes. Module 1 is the attributes of a policyholder. I think that's going to, or module 2, it's actually, this is module 1, but the next module you're going to review is attributes of a policyholder. So that's what you need to look like in order for us to be able to help you. So not everybody's going to qualify, but if you meet a lot of the attributes, more than likely we're going to help you. Understanding how rates are calculated, pricing arbitrage, And there's also a segment on understanding how X mods impact your rates, and that's also going to be a part of understanding how rates are calculated. So you'll want to definitely review those. Well, I want to thank you. I'm going to end right here. So go ahead and move on to the next module for the next training presentation. Thank you.